Analysis from Reuters has found the median performance of SPACs announced this year has trailed the S&P by 15 percentage points. And Leslie, our CNBC SPAC post-deal index is trailing the S&P by 30% year to date. So what's going on with the hedge fund buying activity here? Is this intentionally buying on the dips?
Yeah, so what's really interesting about the timing of these 13F filings is that they are as of March 31st. What also happened on March 31st is you saw two statements from the SEC throwing a bit of cold water on the whole SPAC phenomenon, and that was the beginning of the end of the frenzy, shall we say. That's when you started to see that pretty dramatic underperformance following those two statements. So it's really interesting to see all of these big names get into these SPACs, at least as of the end of the first quarter. Now, it's unclear whether they are still invested in these names, but I would note that there were a couple themes that we picked up from the types of SPACs that they were invested in. I would say that the big investors were really drawn to other big investors leading SPACs. This goes to Thoma Bravo, which is a SPAC spun off of a large private equity firm, Dragoneer, another big investor, Cohn Robbins, two investors slash, obviously Gary Cohn is a banker. So you didn't see them really dabbling in a lot of the celebrity-driven SPACs or SPACs with lesser-known entities. It was these kind of what they perceive to be high-quality investor-led SPACs.
And on that point, Steve, your own kind of way of looking at SPACs and finding the high-quality ones is by companies with what you think are good management teams. So you're also, in some ways, picking through the rubble here, right?
Sure. So I bought two of the names that Bill Foley, excellent money manager, excellent history, steeped in Wall Street, PaySafe, PSFE, and we saw Appaloosa added to that one with a handful of other funds increasing their stake in that one. That one is definitely baby out with the bathwater. WPF hasn't de-SPAC'd yet, another Bill Foley SPAC. That one they are giving away. The company is a light. It's a cloud human resource company. Kelly, this is the main thing. You nailed it kicking off the segment. Buy the management team. Top of that, buy companies that are actual companies. I own another one, STEM. It's an artificial intelligence battery storage play that's in the sweet spot of everything that we talk about right now in green energy. So those three names are real companies with a real future ahead of them. I
was only reading what you said, but I think buying good management teams is something that even Berkshire would say that's all that they do. When you talk to Buffett and Munger, they say over and over throughout the years, it's been much more important for us to buy good management teams than to overly focus on the price. So maybe the SPAC world is playing that out again here in 2021. Let's talk about Goldman saying the bull market isn't over yet for pools. It just initiated coverage of Pool Corp as a buy, anticipating growth in revenues, margins, and returns. Gives it a $535 price target. It's currently at $429. It's about 22% upside. And they're bullish on the sector overall. They're talking about 12% growth with 108,000 pool installations across the U.S. this year. It's interesting to me because you'd think a lot of this is already priced in, but Julia, they're also talking about the shifting population to the hotter South and West as being part of their kind of secular growth story here.
I was surprised as well. I would have thought that people would have been investing in building pools during the pandemic, that year, this past year that they were stuck at home, and now they'd be thinking about getting out of their house, not being hunkered down at home, and instead going out and spending that same money on trips. But I do think it speaks to people leaving cities, moving out to the suburbs, having, bought new houses in the past year, and now thinking about this is going to be where they live rather than in a high rise.
Yeah, and Steve, I have friends who live in, Charleston, South Carolina, and they say you literally cannot survive the summer if you don't have a pool. You can't.
Right. And the other footnote to that is, even though they should have done this, to Julia's point and to your point, even though they should have done this during the pandemic, you couldn't get anyone out to your house to do anything. So they signed a lot of contracts, I'm sure. So a lot of this is a tailwind from the pandemic. But when you think about all the ancillary stuff, the pool furniture, all the other things, and then let's not forget, there's a chlorine shortage right now, Kelly.
Do you have a pool?
So I do have a pool, and I have a saltwater pool, but you're still using chlorine to some extent. It's just the way it's processed. Think about all those diversified chemical names that are caught up in the sweet spot of the cyclical economy and the value play. I own Olin, and one of the three segments is in the chlorine segment. So think about those domino effects and what else you could play off of the pool surge, if you will.
Exactly. If Goldman says it's going to keep going, I love it. All right. Finally, an unexpected beneficiary of the crypto craze is furniture chain Ethan Allen. Its shares have surged more than 40% this year because of an old school problem problem. Investors are confusing its ticker symbol, ETH, with the symbol for Ether. StockTwits told the Wall Street Journal that its Ethan Allen forum is actually filled with messages about Ether, and it's seen activity, Leslie, surge by 300% this month.
People are going to be very disappointed when they realize that they are actually buying the most hard asset of assets, which is furniture. No, but this is becoming a recurring problem. Remember when Elon Musk tweeted buy Signal, and that sent Signal Advance, a stock up like 500% in one day? I mean, why are there not more safeguards? Or are there safeguards for people who are just mistakenly buying these ticker symbols? It seems like it's happening in a much more frequent occurrence over the last year. Part of it has to do with just this tremendous interest from retail investors.
Right.
But how are people not realizing this and really affecting the stock
Steve,
prices?
I can't believe I'm about to say this, but are ticker symbols, do we even need them anymore? I love them. I absolutely love them.
Right.
Are they as essential to modern finance as they were when they first were created?
I don't think so. I think you're onto something there. I think it should just be the company name. But in the lead off to this spot, you showed the Zoom chart. That was another one that they did it with. But if Ethan Allen want to take the bull by the horns, start accepting Bitcoin. There you go. Have at it.
Shepard Smith here. Thanks for watching CNBC on YouTube.